Is the US secretly planning to reset its 37 trillion debt using crypto? Yes, you heard that right. $37 trillion. That's more money than the entire economy of China, India, Japan, and Germany combined. And some analysts believe America has found a backdoor deal with this massive debt through cryptocurrency. Look, I know this sounds like something straight out of a conspiracy thriller, but here's what's actually happening. In just the past 12 months, the US has done a complete 180-degree on crypto. They have passed landmark stablecoin regulation, started building a strategic Bitcoin reserve, and are quietly turning every digital dollar transaction into a way to strengthen their financial grip. Even a Russian government advisor called this an economic conspiracy in a recent interview. And get this, stablecoins already hold tens of billions of dollars in US treasuries. What if I told you that every time you use USDT or USDC, you might be unknowingly helping America manage its debt crisis? Think of it like this. Imagine you owe your friend 10,000, but instead of paying them directly, you convince the entire neighborhood to use a special token that only you control. Suddenly, everyone needs your token to trade, and you have turned your debt into a leverage. That's essentially what some analysts think the US is doing with crypto, but on a world or a global scale worth trillions. By the way, I'm Nikhil. I'm a chartered accountant by profession with nearly 2 decades of experience with EY, PwC, and one of India's top wealth management firm before launching my own startup. And this is Finicky, where I simplify money the same way I practice it. And today's topic, it's one of those rare situations where finance, technology, and geopolitics collide in ways that you could reshape how we all use money. Let me paint a picture on how dramatically things have changed. Until 2024, the US government treated crypto like a rebellious teenager. Constant supervision, strict rules, lawsuits left and right. Remember when they went after Binance, or the SEC sued practically every major crypto exchange? That was the old playbook. But something shifted in early 2025, and I mean shifted. Like watching your strict principles suddenly start an Instagram account. The first act was the Genius Act of 2025. This wasn't another regulation, it was a complete adoption of stablecoins into the traditional financial system. Here's what this act actually does. Only licensed financial institutions now can issue stablecoins. No more random companies creating digital dollars. Every stablecoin must be backed by one-to-one with safe assets like US Treasury bonds and cash. And here's the kicker. These digital currencies now fall under the same regulatory structure as traditional banks. Why does this really matter? Because USDC and USDT, the two largest stable coins that millions use globally for trading, are now essentially part and parcel or extension of the US financial system. It's like the US just turned crypto from an enemy into the newest recruit. But wait, it gets more interesting. The US now actually manages a strategic Bitcoin reserve. This isn't some small experiment. We are talking about cryptocurrencies worth billions that were seized in legal cases, plus new acquisitions the government is actively making. Think about that for a second. The same government that once called Bitcoin a tool for criminals is now holding it like digital gold. They claim it's for national financial strategy and digital economic positioning. Translation? The US wants to make sure that if crypto becomes the future of money, they are holding the biggest pile of chips at the table. Before we go deeper, if this is making sense so far, just tap the like button and subscribe. It really supports the channel and tells me to do more videos like this. And I also see more than 90% of the audience have not subscribed yet. Now, let's talk about where the conspiracy theory starts flying. Some global analysts, and we are talking about serious people here, not those random Twitter accounts, believe the US is laying the groundwork for what they call financial reset using digital assets. The theory goes like this. If the US can successfully position dollar-backed stablecoins as the primary currency for global trade, and if they control enough of the crypto infrastructure and reserves, they could potentially use the position to restructure or even dilute part of their 37 trillion debt. Let me give you an analogy. Imagine you're playing Monopoly and you're losing badly. Mortgages everywhere, barely any cash. But then you convince everyone to switch to a new version of the game where you control the bank, and you've already bought up half the new properties before anyone else knew that the rules are about to change. That's what some people think is happening here. Some analysts even predict a crypto gold reset where digital assets would be used alongside gold reserves to completely rebalance global economy. A Russian government advisor literally called it an economic conspiracy, suggesting the US is using digital asset as an escape route from unsustainable debt. Now, before you start converting all your savings to Bitcoin, let's separate facts from speculation. And here's what we know 100% is real. First, the Genius Act and the stablecoin regulation, totally official, fully implemented. This brings stablecoins into mainstream financial compliance, no questions asked. Second, stablecoins today hold tens of billions of dollars in US treasuries as backing. With these new regulations, analysts predict this could scale to hundreds of billions within a few years. Third, the strategic Bitcoin reserve is real. The US government has publicly acknowledged this initiative. They are not hiding it, they are actually promoting it as part of their digital finance leadership strategy. Fourth, the White House has openly stated their goal to make US the global leader in digital finance. This isn't conspiracy, it's official policy. All of these developments have happened within the last 12 months. That's not normal policy evolution, that's strategic pivot at abnormal speed. But here's where theory starts to crack. The idea that US could simply go digital and make 37 trillion in debt disappear? That's not how money works, and it's definitely not how debt works. Let me explain this simply. Debt is like gravity. It doesn't care whether you measure it in kilograms or pounds. It still pulls you down the same way. Whether your debt is recorded on paper, in your computer, or on a blockchain, you will still owe the money. Sovereign debt restructuring isn't a tech update you can download overnight. It's a complex legal process involving Congress, the Treasury Department, and most importantly, agreement from creditors. China holds over $1 trillion of US debt, and Japan holds even more. You think they're going to say, oh, you switched to crypto? Cool. Debt forgiven. Not happening. Plus, these regulations being implemented prevent this kind of manipulation. Stablecoin must maintain full reserves. For every digital dollar created, there must be a real dollar or a treasury bond backing it. They can't offer interest or returns unless they are registered as a financial products. Every transaction is audited, transparent, and subject to regulatory oversight. So when someone claims America will wipe off debt using crypto innovation, they're mixing flashy tech narratives with poor financial understanding. Technology can change how money moves, but it can't change who owes it. That's not digital transformation, that's wishful thinking dressed as disruption. So why do smart people still buy into this theory? Because while crypto can't delete America's debt, it absolutely can strengthen America's financial power in clever ways. Here's the thing about debt. It only becomes a real problem when people stop trusting that you can manage it. Japan currently has debt that's 260% of its GDP, yet nobody panics about the yen. Why? Trust and control. Now imagine this scenario. Dollar-backed stablecoins become the default currency for international trade. Every country, every major corporation needs them for cross-border transactions. To support these stablecoins, global institutions must hold US Treasury bonds as backing. See what just happened? The US didn't reduce its debt, but it created massive new demand for the same debt. It's like being the only restaurant in town. Even if you owe money to suppliers, as long as customers keep coming, you are still in control. Similarly, if Bitcoin continues rising in value and US holds strategic reserves, it's like having a digital Fort Knox that strengthens their balance sheet without printing a single new dollar. The real theory isn't about deleting $37 trillion, it's about staying economically dominant despite that debt. By controlling the infrastructure of digital finance, the US could maintain its position as the world's financial superpower for decades to come. Let's look at various scenarios here. There are 3 ways this could possibly play out. Scenario A, strengthening dominance. This is the most likely outcome. Stablecoins become the standard for global trade. Since they are backed by US dollar and regulated by US system, this increases demand for dollar and treasury bonds worldwide. More countries become dependent on US financial infrastructure, but digitally this time. America maintains leadership without restructuring any debt. They just make that debt more essential to global commerce. Scenario B, partial restructuring. If the US gains enough control over digital frameworks, they might attempt to adjust certain financial components. But this is incredibly risky. Even suggesting debt restructuring could trigger a confidence crisis. Global partners might panic, markets could crash. The political backlash alone makes this scenario unlikely, though not impossible. Scenario C, global resistance. If the US pushes too hard, other nations might rebel by creating alternatives, their own CBDCs, gold-backed cryptocurrencies, or regional digital systems that bypass the dollar entirely. China's digital yuan is already in testing. The EU is developing a digital euro. But building trust in these alternatives would take years, maybe decades. Given the current momentum, scenario A seems almost inevitable. The US is positioning itself to dominate digital finance the same way it dominated traditional finance in the 20th century. So, what does this mean for you and me? Let me break it down practically. First, crypto is going mainstream, but not the way early adopters imagined. Instead of replacing banks, it's absorbed by them. The bank app might soon have digital dollar section right next to savings. Second, those crazy 1000% returns we saw in cryptos Wild West days, those are probably over. Regulation brings stability but kills volatility. Crypto is growing up, which means it's becoming boring, and in finance, boring often means safer. Third, don't get caught in the hype. Government adoption doesn't guarantee profits. Remember, governments adopted the internet too, but that didn't mean every .com stock was a winner. Fourth, treat crypto as a satellite investment, maybe 5 to 10% of your portfolio, not your entire retirement plan. The core of wealth building remains unchanged. Diversified equities, bonds, real estate, and yes, boring old mutual funds. Now, what about India? The RBI has been crystal clear they are not jumping on crypto bandwagon yet. Instead, they are pushing their own central bank digital currency, the digital rupee. It's like watching two tech giants release competing smartphones. If the US continues building power through digital dollars, expect India to accelerate digital adoption while keeping tight controls on crypto trading. The message for Indian investors? Don't bet the farm on crypto. Our regulators see it as a risk, not as an opportunity. For Indian investors, this means keep crypto tactical. A small, high-risk portion of your portfolio for potential upside, but never your core strategy. Stick to SIPs, mutual funds, and regulated investments for serious wealth building. Think of crypto like that one risky stock you buy with money you can afford to lose. Here's something that keeps me up at night. We are witnessing the digitization of financial power, but are we ready for what that means? Imagine tomorrow your salary arrives as digital dollars backed by US debt. Your EMI payments flow through stablecoins regulated by American laws. Every coffee you buy creates demand for US treasuries. You would have all the convenience of digital money, but every transaction would tie you deeper into a system controlled thousands of miles away. Is that progress or dependency, security or surveillance, innovation or infiltration? So let's answer the big question. Is the US planning a crypto reset? The truth is more subtle than the conspiracy theories suggest. The word reset implies starting over, wiping the clean state. That's not what's happening. What we are seeing is integration and evolution. Yes, the US is actively using digital assets to strengthen its financial system. Yes, stablecoins backed by US Treasury assets are absolutely part of that plan. Yes, strategic Bitcoin reserves may become as important as gold reserves once were. But no, there's no magic button to delete $37 trillion in debt. The US isn't escaping its obligation, it's making those obligations so essential to global digital commerce that everyone becomes invested in maintaining the system. Crypto isn't overthrowing the system, it's being absorbed by it. The revolution got a corporate job, a regulatory framework, and a government ID badge. So the smarter question isn't, will they reset the economy, but rather, how will they use digital money to ensure the old power structures survive in new clothes? And here's my challenge to you. If every digital transaction you make strengthens a financial system you have no control over, are you comfortable with that trade-off? Is the convenience worth the dependency? Comment below with your thoughts. Are we witnessing financial innovation or digital colonization? And more importantly, how are you positioning yourself for this newer reality? That's all from me today. If this opened your eyes to what's really happening in global finance, share it with someone who really needs to hear it. Because in this new digital money game, the only thing worse than playing badly is not knowing you're playing at all. Stay smart with your money, and I'll see you in the next one. Till then, subscribe to learn how to make your finances less tricky with Finicky.